Hey, what's up guys? So I'm back finally with another video. Okay, we are going to talk finally on the fair value gaps. Okay, this is going to be the video on fair value gaps. Okay, that's going to be day 4, I think. Yeah, so I was busy in some of the work. Okay, I was busy in ETH event, of course. So that's why I was not able to create a video. Lately, I'm back. Okay, so now we are finally going to talk on the fair value gaps. Okay, this is going to be the important topic in trading, which you must know. Okay, if you're learning from me, if you have not other mentee who is retail trader, then of course that's going to be the video which you need to understand. Okay, the fair value gaps. So now we are going to talk on some of the core concepts in that video, of course. So we have the number one thing: what is fair value gap? If you're not aware of that fair value gap thing, that's something in the market which repeats. Okay, that's something which is important in the market. So with another thing, types, if you are aware now of fair value gaps, I teach you, and then you are going to ask, like, is there any types of the fair value gaps? Then I would say yes, of course. We are going to finally talk on some of the types, and then you will ask, of course, if you are that type of intellectual, you are going to go into the fair value gaps. Okay, there should be fair value gaps. There must be types of fair value gaps. But is there anything which is going to invalidate fair value gaps? Then I would say, oh, that's a good question, because people do not know what's the problem can happen in when they learn things. Okay, so I would teach you, yes, there is something which is going to invalidate fair value gaps. There's a point it sometimes is not going to work for you. Okay, and then I would give you examples of all the things which we are going to go with into the charts. Okay, and I would show you the live things. Okay, so we are going to firstly talk on fair value gaps. So what is a fair value gap? Fair value gap, it's a 3 candlestick formation where the third candle does not trade back to the first candle range. They don't overlap, leaving a gap between them, forming an imbalance. Okay, with the 3 candles, I'm going to give you the example later. Okay, a fair value gap, that there's an imbalance in price where only one side of the markets will offered. So price will often gravitate back to the offer, the other side finding continuation. Okay, before finding continuation. So imbalances are often a sign of displacement. Now displacement is a move higher. Okay, and when aligned with the high time frame premise, they can reveal the intention of the market. So if we have imbalance, right? Huge imbalance. Now we want to see a retracement little according to the high time from key levels. Okay, and then we are anticipating price to go either upside or either downside. Okay, so now we are going to finally talk on the types of the fair value gap. If you are not still aware of fair value gap, what is fair value gap, how does it look like? Looks like, okay, I'm going to teach you right now. Okay, we have types of fair value gaps. There are 2 types of fair value gaps mainly, right? We are going to create other videos too, but there are 2 types of the fair value gaps right now. Okay, you don't have to make it more complicated. We have the buy side imbalance, sell side inefficiency, which we call BC. A bullish fair value gap formed when there is an upward displacement and the third candle does not retrace into the range of the first candle. Now, what does that mean? Okay, we have something we are going to talk. So right, we have the first candle, with the second candle, with the third candle. So now, like, where is fair value gap? So with the 3 candles, the first candle's high and third candle's low is not overlapping. Okay, they're not, like, if you look up at this wick, okay, that's not touching that wick's high. Okay, with the first candle, second candle, of course the third candle, this high is not overlapping with the low. That means that's the fair value gap, with the gap between these 2 candles. If you see, okay, only buy side liquidity has been offered. Now what does it mean? Okay, so sellers are not having any chance to participate that move. We have higher prices. Now only bullish buyers are going to buy because they are seeing huge movements in the price. Now what does price do is when price sees the people who are buying and buying and buying, it is going to manipulate all the buyers by retracing into that gap. Okay, price retrace that after some while. Okay, and then whoever was buying, they put a stop loss maybe below that low, maybe below that. Okay, so it's going to hit the stop losses. Okay, that's what does it mean. Okay, now price often pullbacks into the gap to offer sell side and rebalance the market. With the gap, with buyers come into that, now equal. Okay, all the buyers gone. Now sellers are anticipating the price that it's going down, and boom, it's going up after filling that imbalance. I'm going to give you the examples lately. Okay, don't worry. So validated once the third candle closes. Now we have the three candle stick pattern. Okay, if we are now waiting for the third candle closer, then there is not going to be the fair value gap. Maybe that we can overlap before closing that candle. So we have to wait for the third candle. Okay. Now we have the second type of the fair value gap, which we call the sell side imbalance, buy side inefficiency. A bearish fair value gap, okay, formed when there's displacement downward and the third candle does not retrace into the range of the first candle. There's an example. There you go. The wait is over finally. Okay. So now if you look up at this example, we have the first candle, the second candle, and the third candle. Or either we can say first candle, second candle, and the third candle. So now we have this low to this high. They're not overlapping. Okay. They are not touching their wicks into the high and the low. Okay. That's going to be the fair value gap, what we call. With the gap, okay, only sell side was offered. So now only sellers are anticipating into the gap or into the displacement. Okay, buyers didn't get, of course, chance. Now what price is going to do is just going to rebalance it. Okay, just going to go higher, and now it's going to sell off. Okay, so every seller was selling from that displacement are going to be liquidated after retracing that balance. Okay, fair value gap. Price often pullbacks into the gap after buy side and rebalance the market, validated once the third candle closes. That's the fair value gap, okay? Now the question, which is the last and lately people ask, maybe sometimes the genius people are going to ask like, okay, there's a fair value gap, so why and when it gets invalidated? I'm going to teach you, okay, don't worry. We have this. When is in fair value gap invalidated? So the thing is an early indication that fair value gap is likely going to fail when a candle closes beyond the consequent encouragement of the fair value gap. Now consequent encouragement, C level of the fair value gap is the 50%. We have to measure the gap, okay? We have measured, we have to mark the 50% of the gap through any gain box, or maybe you can use any other tool to get, have an idea of measuring the gap. You got a 50% C level, okay? Now, a bullish fair value gap is invalidated when there is a body close below its low, okay? Let's example. We have the first candle, second candle, and the third candle. We have the high with the low, this fair value gap. If the candle is closing below that fair value gap, okay, it's not just like, giving a wick and just going above. But the body closure, if you look up at it, we have the body closure below that fair value gap. Now it's invalidated. Now we have don't any idea of maybe price going higher, maybe lower from the fair value gap. We don't have idea, so it gets invalidated. And we have another example. A bearish fair value gap is invalidated when there is a candle body closer above high. Okay. There's example. We have SIBI, what we call sell side imbalance, buy side inefficiency. We have the candle, we have closed above that high, the body closure. Now it's invalidated, okay? We are not going to just wait, okay, maybe it can offer a trade idea. No, okay? That's invalidated. Now we are going to go to talk on something on the charts, okay? As you can learn what I'm teaching, okay, let's go. Yo guys, so this is going to be the example video, okay? We are back into the charts. We have the daily chart, okay? That's where I go into the high time frames because high time frames are often very easy to get, okay? So now we have this fair value gap. Now why is that fair value gap? Is because we have the first candle, the second candle, and the third candle. Closes, okay. We have this high right about there, okay. If you look up at that, with the high there, and we have the low there, they're not overlapping. So that's what we call the fair value gap, okay. We have the gap between these two highs, okay, these two highs and lows, okay. So with the high, the low, not overlapping. This wick is not overlapping with that high. So it's fair value gap. Simply, it is US. We can say price went up above, okay, then it retraces back into that fair value gap. So that is the fair value gap. Now, price has been retracing into the fair value gap and just going up. Somehow consolidation. It means it's been respecting that gap. Why is it happening? It happens every time. If you go back, we have that sell side taken with that fair value gap. Also, we have that fair value gap. Prices just come back to that fair value gap and just going to go up. It happens every fucking time. If you see, okay, this fair value gap has been filled, right? And if we move forward and then see prices just going up, okay, after filling that imbalance, we have this imbalance right there, okay. So fair value gap has been filled. We've not closed below that fair value gap. It means it's been respected till now. So now if we look up at these candles, okay, now finally we've closed below that fair value gap. Okay, so now what and where we are going to go is maybe that gap, maybe that break block. I've not clarified you break block, but I'm going to go maybe in 1 or 2 days, okay. So that's the fair value gap, which is been respected, may respect, price may respect it, or either just go up, okay. So now that fair value gap has been invalidated, okay, we have to just wait what price is going to go. Okay, now we have a huge, right, like pump into the market displacement off of that order block, okay. That's the order block, which we have to talk maybe later, okay. I'm not going to go in today's video because this video which we are going to talk on only fair value gaps, okay. So we want to wait for price to change in the structured delivery, okay. We did, okay. Now, do we have any fair value gap? Yes, we have the first candle, the second candle, and the third candle. We have to wait if price is just filling it and going up, okay. We are not going to see that fair value gap invalidated. If price is going to do it, then of course we're not going to look for the buy side price, okay. Let's see what is going to price do, okay. We have a little retracement of that C level of the fair value gap, and then we are not still close below that C level, which is that, okay, measurement of that 0.5, okay. Now, okay, we just have closed below that fair value gap. It means we are going to now go maybe to fill that imbalance, okay. Let's see. With the sell side liquidity here, which is low, which we've talked before, of course. Sell side liquidity right there. So now we are going to fill that imbalance maybe. We have to wait, okay. Okay, we just have filled that gap. Now let's see what this price is going to do. We have been touching that C level of fair value gap. We've not closed. Okay, we just click that and just going above, okay. Let's see. Okay, we have the 3 candles. Now we have the gap, which is what we call the fair value gap in between them. If you look up it, okay. So first candle high, third candle low, not overlapping the fair value gap, and okay, we just have filled that imbalance, and now we want to see price to go higher. Okay, fill the imbalance, going higher. Let's see if we create another fair value gap too, okay. Again, we've just, filled that imbalance. We have the imbalance right there, okay, which we have filled. First candle, third candle, second candle, and third candle. We have the CB here. That's why we are going down off of it, and we have the busy buy side imbalance, sell side inefficiency, right? That's why we are going to go higher right there, okay. And then finally we have taken out the high, right? We have disrespected finally that imbalance because we have closed above that high, okay. right? We've taken out the buy side liquidity, the imbalance, buy side taken, and then let's see what is price going to do. We have another created fair value gap. Okay, we created another fair value gap right there. So the first candle, the second candle, the third candle, busy. We want to see price to fill that. Okay, let's see. Okay, we filled that imbalance, and now let's see. Okay, we have closed below that, so maybe we can fill and go down, but we have the order block here, so we have to just wait what price is going to do. Okay, so that was the example of the fair value gap. Okay, hope you got it, and I believe that's the clear example of how you can trade fair value gaps. Okay, hope you guys enjoyed the video. Hope you guys got the education. Hope you guys get something. Okay, so now I'm going to create another video very soon, maybe after some days, maybe after day after that video. So you have to just comment if you're learning, if you're actually gaining the things which I'm teaching you. Okay, thank you guys for watching the video. I hope you understood the fair value gap video. I'm going to make another video very soon. Thank you. Goodbye.